A new report out this morning says the UK housing market is making a comeback. But what about prices here in the United States? Well, we partner with the Financial Times to bring you Lex on Bloomberg so you can get a sneak peek at the FT's flagship column a day early. Joining me live from London is Stuart Kirk. Stuart, you've taken a look at the U.S. property market. You've compared it with other asset classes around the world. What'd you find?
Well, we've been getting some data now from the Fed for towards the end of the year, what we call the flow of funds data. And what that shows is quite interesting. If you go back to the Second World War, U.S. house prices are now below trend relative to disposable incomes, i.e. after taxes, what we can spend on our mortgages. In fact, they're not only below trend, they're now about average for that post-war period. So if you believe that people now like spending money on houses more than they used to, for the first time in a long time, property's looking okay, especially when you compare that to other asset classes.
Well, let us talk about some of those asset classes and why they look less attractive, perhaps, than property.
Well, let's take equities, for example. Now, we remember the lows back in March. Everybody thought that was a screaming buy opportunity. Again, if you look at the Fed flow of funds data, we show that actually since this last rally from about March, equities are looking, from our point of view, almost 50% overvalued. Now, investors need to be careful not to look at very short-term things like straight PEs. You need to take average PEs over very long periods of time, at least 10 years, and then adjust them for all the changes in accountancy and so on. And that's what the Fed does, and that's what gives us our overvaluation call.
Okay, now if we do look at those other classes, asset classes, and say they are perhaps overvalued and U.S. property is undervalued, surely there are a couple of other things we have to take into account. One being that you've got to be a discriminating buyer when it comes to real estate. And secondly, it's not as if it's that liquid a market, right?
No, and that's right. I mean, this is the big joke about property, isn't it? It doesn't matter so much what its absolute level is. To you and me, it matters a lot more about its relative value. It doesn't matter if property goes up or goes down, as long as my house doesn't go up or down as much as the next one. So you're right, it's mostly a relative call for people. And for most people, it is their most important asset. And if they like what they see and they can afford it, they should still probably buy it.
All right, Stuart, thank you very much. That's Stuart Kirk from the FT's Lex desk in London, taking a look at asset classes and finding there may be some value in U.S. real estate.